Hi guys, welcome to my YouTube channel. The last time I was making a video, I was talking about structure, liquidity, supply and demand, and basically every other trading concept out there. And I just thought that I've not created my normal videos for a while now because I've been very busy with trading, and I've been really focused on trying to grow small accounts, scale small accounts, of which this week we're also able to grow a small account as well. I've uploaded a $5 deposit that was grown to as much as $15, and I think we've done that over and over and over again. So basically, why I've been making more emphasis on growing small accounts is because I understand vividly that people sometimes don't have that much money to deposit in their trading accounts to trade because of low income and many other factors that could be influencing their financial decisions when it comes to making a reasonable or sizable deposit in their forex trading accounts. So I've made another video, or let's say I'm currently making another video on the psychology behind growing a small account, how to take your time, plan yourself, be very meticulous with literally your decisions, everything you're doing, calm down and then make the right trading decisions, make the right execution, the patience to hold the trade to play out, the patience to wait for the trade to come to you, because obviously you have to first wait for the trade to come to you before you can now think of holding the trade after execution and waiting for the trade to play out. And also too, there's one thing that people don't talk about is the precision with timing. I've noticed something about the market. Market doesn't wait for you. It doesn't wait for you. Sometimes your entry can come by 1 a.m. in the midnight. Your entry can come by 2 a.m. in the midnight. Your entry can come literally at any time. And if we are in a business where entries matters a lot, as it can influence your risk-reward ratio, it can influence quite a whole lot of things, right? Especially if you're being mechanical with your stop loss and your target levels, right? Entries can actually be so important. So if entries can be this important, then the best thing you want to do for yourself is build a structure that makes you know when to expect an entry, when to start waiting. There are times that I literally had to stay up all night because I'm very sure, okay, this entry, with the signals I've seen, this has happened, the chances I could have that entry today, this evening, right, or this night, or in the morning. So because of that, I had to stay up, I had to wait, right? So that is something that is always less talked about. So many training mentors out there who are, they have people following them, like lots of people following them. You don't see them referencing, okay, what happens in between them waiting for their setups, whether they're using limit orders to wait for the setup, or whether they're actually staying up to engage manually to see if they can have the best reaction for the best entry, or like what's really happening. Sometimes you set limit orders and price comes and doesn't trigger you with spread reasons, right? And then you don't have to do it, find a way to engage manually by yourself because price didn't trigger you. Now, when you're in such situation, how do you manage the situation? How do you regroup yourself together and make the right informed trading decisions, right? So it's something that I know is less talked about, and I'm going to talk about it now. First, over the years, I've actually been able to build a structured approach to how I trade. So I know when to expect a setup. I know when to expect an entry. Now, expecting a setup is different from expecting an entry. Most people confuse entries with setup. You have a setup, setup is basically you to follow up something till it gives an entry, right? Like I could be bullish on euro dollar. I know euro dollar is going to buy. I'm setting price to come to a certain area of interest. It comes to my area of interest, and then that is when I now start to do what? To look out for entry. I cannot be looking out for entry when I'm still expecting setup. And also too, I cannot be I don't know why this sounds very funny, but I cannot be expecting a setup without doing my homework to get the setup, right? So you first of all need to do your homework, make your analysis, and then after you've gotten your area of interest, that is when you now do what? Start expecting what? A setup. Now, after you've done your homework, you've expected a setup, then you can now say, okay, I'm going to look out for entry, right? So what I do, I divide it into two parts. First, setup. Second, entries. You need to build a plan to know when to expect a setup. Like me, I have some certain candlestick closures that will tell me, okay, you could be buying tomorrow, or you could be selling tomorrow, or you could be buying this week, or you could be selling this week. Now, after I've built my setup plan, I now also followed by doing what? By building an entry plan. The setup now has come to me, and I'm like, okay, I need this to tick for me to now say, okay, I can now engage a buy or engage a sell, right? After I've had my setup plan, I now follow up by having an entry plan, because I need this to tick for me to now know that, okay, it's time to engage. I can now have an entry. I don't confuse setup with entries. For real, I don't. I know that I need to have a plan. Something must happen for me to now say there's a setup. Something must also happen before I now say there's an entry. Now, guess what? Most people don't even have a very defined structure of what they are looking for, like what they want market to show them before they can now enter a trade. They're just in the market wallowing around. They don't even know. They're like every other blog. They say, oh, I have a trade. Every candle that closes, oh, I have a trade. Every support and resistance level, oh, market might buy from here, market might sell from here. If it's a game of probabilities, the best thing you want to do for yourself is building very strong fences that gives you a probabilistic edge of things happening in your favor more often than otherwise, right? And if you're able to build that edge, that's when you can now wake up and say, okay, I think I now have a setup formation, and I also have an entry formation. Recently, I have this trade I'm following up, GJ, that is on pound yen buy. Price came to my area of interest, right? Now, that's when I know I had a setup. Waiting for an entry. I waited for this entry the whole of Friday. This entry did not come. I'm maybe praying, hopefully, I'll have an entry on Monday. Guess what? I opened the normal, social media app, that blue app. Okay, they used to call it that bird app. Before it was X, right? While it was still called Twitter. I opened Twitter, and then I was seeing that most people are already in the trade, like they have entries already. Now, does it mean I'm going to jump and follow them and engage? Buy. Oh, we are all buying GG. No, you all are buying. I don't have an entry yet. You all can buy. I've not gotten an entry to buy. I can't join you guys. Now, people think because the masses are doing something means it is right. Come on, we can all buy Euro USD and we are all wrong. Everybody loses money. You understand? Now you will now feel so hot because you joined the crowd with your last sample size or your little sample size, thinking, okay, you can afford to join them. And most of the time, 9 out of 10 times, it is literally against your rule. That entry that you want to engage is against your rule. Uncle, calm down and pick the right entry. Yeah, you need to calm down and pick the right entry. That is why it is called what? Probability. So if your entry has not come, sometimes the entry formation doesn't come at all and the setup fails. Now what will you now do? Oh, this setup didn't give me an entry. That's why I didn't engage. You're safe. Other times too, the setup can come, the entry formation doesn't come, and the setup plays out. You will now start feeling some form of FOMO, like, oh, I should have engaged it, why didn't I engage it, and all of that. No. You shouldn't be feeling like that. You shouldn't be feeling like that, because to think of it, just as it played out, it could have failed. It could have failed, and if it failed, you have yourself to blame. So you're not going to now start saying, oh, I should have entered, I should have done this, I should have done that. No, calm down. It can give you a setup and not give you an entry. So now what will you now say, okay, this is my edge. Something that both produced a setup and also produced an entry. Good and fine. Now we are talking. You can be like, okay, price gave me my trade. I have an entry, I have a setup, and I also have an entry. Now, another thing we could also don't talk about is the mindset behind holding their trades to TP. I think many mentors out there are not, they don't go into details when it comes to these healthy practices of trading, right? Example, I keep saying it, if you enter a trade and you don't hold that trade to either hit your stop loss or your TP, you're gambling. Yes, it's gambling. It's gambling because how would you draw data from your setups if you don't hold to either TP or stop loss? How are you going to know your profit factor? How are you going to know your win rate? How are you going to know how many times you're buying, how many times you're selling? How are you going to understand like your trading personality? You don't even know the number of pairs that you used to rotate in a month, in a quarter, in a week. You don't even know any of those things. You just buy, you see small blue, you close out. When you now buy and then it's now in red, you hold the red to the stop loss. But then when you buy and it's in blue, and most times that blue that you closed out early keeps going your direction, how would you know what you're doing, right? So to scale small accounts, sometimes you need very good risk reward. I recently closed out a trade for 1:8R. That trade, the projection was as much as 1:15R, but to me, I have like a personal discipline that once a trade does 5R, that trade was successful. The fact that I held up to 8R doesn't mean I should have held up to 8R, but I mean, what it means for me is if I'm going to lose to this trade, I can't lose below 5R anymore, right? So I held it to 8R, and then some other accounts held to as much as 10R, 11R, and so on and so forth. Now that's how you scale, that's how you grow small accounts. Imagine you fund $20 and you divide it by 4, right? And you're willing to risk $5 on a trade, and for every 5R you make, you're making $25. But let's say you're trading 4R, let's not even go far. You're trading 4R, if you win 4 trades, that's $60. That's how much is that? $20. Yeah, that's $80. For 4 trades you won, your $20 deposit is now $100 just because you won 4 trades, right? That's how you grow. Now, how will you have those strategic positioning of entries and exits? Is by what? Understanding your setup, understanding your entries, and then waiting in between. You're not rushing. Why are you running? So you're not going anywhere. Calm down and wait. I mean, it's a full-time job. I keep telling people the same way people go to school to read professional services like being a doctor, medicine and surgery. People read aeronautical engineering, people read chemical engineering, people read a whole lot of things, right? Political sciences and research. That is the same way Forex is a full-time career. Yes, speculation is a profession. You're looking to buy low and sell high, right? You're looking to buy when the value of the financial instrument is low, and then you're looking to sell when it's high to make profit. If you buy high, you're making a loss. If you sell low, you're making a loss as well. So if there are things to guide you and put you in check to make sure that you're neither buying high nor selling low, then you have to stick to those rules if you must make money, right? So today's video is just, a random conversation on growing small accounts. I'm really interested in people growing their small accounts. I don't know, I kind of feel like you need to be able to grow that small money before you go on and purchase a proprietary firm. You can't just wake up and buy a proprietary firm. Let's say you have some $100 lying around and you rush to go and buy a $10,000 proprietary firm because you think, okay, you pass it. If you can't grow small cash you funded in your trading account, proprietary firms won't be anything different. Yeah, once you pass those rules and get verified and make a payout and make consistent payouts, you have to be making payouts on your personal small account. Your $10, your $20, you have to be making payouts from there as well, because there are not even rules there. All you have to do was be patient and wait for the little returns, right? Good. So I think I'm going to say this. I urge you guys to, people who are trying to grow small accounts. Not everybody that are going to watch this video have big accounts, right? Some people have small accounts. You have a small account, take your time, don't rush, just try to grow it small. Have a setup, have an entry for literally everything you're doing. Make sure that you can define your setup, you can define your entry, and the moment you've done that, I promise you'll be able to scale from there. You can easily grow slow and steady, and before you know what is happening, you'll become consistent. Mind you, you don't even need that much trades to be a profitable trader. You become consistently profitable by just repeating the same habits again and again and again. And that's how you grow.